Good morning, everybody. Welcome to another episode of Environmental Social Justice. Today, I have my good friend, Mr. Paul Ellis. He is an ESG consultant and runs the Finance Podcast, or Sustainability Finance Podcast, my correction. So welcome to the show, Paul. Thank you so much for joining us today.
Thank you for inviting me, Wendy. I'm really looking forward to our conversation.
Oh, thank you. And one of the things I love about what you've done is you've been an investor and been in finance for 20 plus years. And one of the things you learned from that experience was people like to invest in their values. What exactly does that mean?
Well, I think there's some misconceptions in the marketplace today about what that means. When I started doing it 20 years ago, it was really about checking with my investor clients about what their personal values at the core of all of the important decisions in their life that they were making in our work together. All of their financial planning was driven by what they really wanted to accomplish personally as well as financially.
And that's huge. I mean, a lot of people, they think money, 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 but now we're kind of making a change. And there's a noticeable change in society that it's like money's great. People like it, but we also have to focus on doing the right thing, investing in the right type of things that won't cause more damage than good. And that's where we come in with your sustainable and impact investing with what you also offer as a service, but your podcast. So just so everybody can understand, could you explain what impact investing is?
Sure. Impact investing has been at the core of this entire movement for close to 40 years now, long before the term ESG was coined. And in the early days, impact investing was and continues to be a way of approaching investment in public or private companies that generates returns and at the same time has some environmental or social impact on society, on communities, on companies in a way that looks at what they're doing in the communities where they do business. So an example might be a utility company that is generating most of their energy using fossil fuels. Well, that was acceptable for a couple of 100 years now, but it is no longer because we are polluting the environment with coal fumes and CO2 and greenhouse gases that are clogging up the atmosphere, frankly.
Yeah.
So we need to find new ways of approaching that, and impact for that kind of a company in a positive way could be transitioning to clean energy sources so that they're not putting as much greenhouse gas pollution into the atmosphere.
Exactly. And it's not just an environmental justice, but social justice, because a lot of people who live in the cloud of those industrial plants are
Yes.
usually disadvantaged communities, and then they're prone to get sick very easily. They grow up in that environment, so they do have health hazards. And that particulate matter that comes out of those smog clouds is not healthy at all. So by putting your money where your mouth is, for lack of a better term, people are encouraging to do the right thing, which is encouraging the companies saying, hey, maybe we should get our energy from renewables rather than coal and petroleum. Which brings me to talking about your podcast. Now it's called the Sustainable Finance Podcast.
Yes.
Focused on ESG. Tell us about that. I think it's amazing what you're doing, the service you're offering, the services you are offering.
Well, thank you very much. We've been doing the podcast for 4 years now, and it originated as a way to promote a conference for financial advisors in 2018 at the United Nations that I was co-convening with my good friend Jeff Gitterman, who runs his own registered investment advisory practice in New York City, and a whole group of other people who came together and said, listen, this part of the industry has been promoted very well out on the West Coast, and we need to bring that same type of positive impact and promotion to the finance committee on the East Coast. So we partnered with the United Nations Partnership Office and put on a conference there. And we used the Sustainable Finance podcast to promote the conference. After the conference, it really took on a life of its own. And last week, we posted episode 160.
Congratulations on that. That's awesome.
Thank you.
I want to focus on one thing you said. There was the positive influence. You and I have had conversations in the past that most people in the environmental world talk about everything negative going on, all the bad, and that is psychologically affecting people. Mm-hmm. It is met very many young people who just feel like the world's going to end, so why bother? You and I are in sync with the positive reinforcement, educating and communicating to people that we can change things, we can fix it. It's not overnight, it'll take time. But with what you're doing with ESG investing, guiding people on how to properly invest their funds in the good rather than the bad, this will help everybody across the board, not just the United States, but worldwide.
Yes, I completely agree with you. And that's one of the reasons that a very important part of my consulting work on an ongoing basis is working with financial advisory practices and helping them integrate sustainable and ESG investment strategies into the portfolios that they offer their clients. And just as importantly, to learn how to position that type of portfolio structure with your clients. Many advisors are still lacking the vocabulary that includes a lot of terminology, a lot of titles and all that sort of thing. And what we're starting to see now is a consolidation of the language and the protocols that are being used to monitor that and to provide more clarity around corporate reporting, for example.
And I love the fact you brought up clarity, because one of the things that, with my particular podcast is no acronyms, no high-level jargon, because that can confuse people or have them think, oh, that acronym must mean this when it actually means something else. And with finance people maybe not having the environmental background that you have, they may misunderstand certain things or not properly invest. They think they're properly investing in something, but may not be, which brings me to my next question.
Sure.
The SEC, the Securities Exchange Commission, is now following these ESG reports and, basically holding people accountable for the reports that they've given in the past. And we are now seeing fines being levied against people who are not exactly doing what they said they were doing. Would you mind explaining a little bit about that?
Well, this has been a long time coming. I'm personally and professionally very glad that the SEC is now starting to put some clarity around the rules and regulations for companies on reporting their environmental and social impact. And let me just say that for many years, as you mentioned before, there was a lack of clarity around acronyms, language, even what was material or is material for companies in certain sectors of the economy to be reporting on. So this is not a matter of every company out there trying to avoid reporting. Many companies in many sectors of the economy are interested in reporting and providing that information to investors because it attracts more capital to the work that they are doing. And the SEC stepping in and proposing regulations now, which have not been totally adopted, but at least are in discussion. And they in fact, people can still make comments until I believe it's June 27th on the outstanding protocols that the SEC is reviewing. So if any of your viewers are interested in finding out about that, they can check out the second to last episode of the podcast, where I spoke with a representative from CERES, that's CERES, which is a nonprofit organization that does a lot of research and development in this area across the finance industry. And people can go to my website, which is paulellisconsulting.com, and go to the podcast page on that website. There's a tab on the opening page, and they can find that episode and listen to it and get a little better understanding about what the SEC's proposed rules and regulations are about, and then they can comment them publicly on if they want to.
Oh, absolutely. And, I love the fact that you interviewed Sirius because I followed them for years. I believe they're based in Boston, correct?
They are, yes.
They are a wonderful company. I mean, they do a ton of research, development, and investigation into this amorphous ESG that a lot of people didn't understand a few years back. And as you had corrected me earlier, before we went recording, I didn't realize just how ambiguous some of the ESG reporting guidelines were. I knew there were many sources and many ways to do it, and some of these reports were 300, 400 pages long to read through and check through boxes. So it is difficult. It's not the easiest thing in the world. But again, I highly recommend following Paul and checking out his webcast and checking out his services, because this is how you help people. You guide them through these things so they understand what it means, because it's not the easiest thing in the world.
Well, that's true, and the core of my business is about supporting financial advisors in this process. It's just as confusing for them to integrate it into their business so that they're not violating their fiduciary responsibility to their investor clients, and it's also an educational process, as you mentioned before, that takes time for even the professionals in the world of finance to integrate this into their business model. Now, I'll also say that in Europe, their reporting infrastructure is a little bit more advanced than ours at the moment. They're covering a lot of different economies that all are combined together in the EU, and then the UK is now developing its own protocols. I think what this is going to ultimately turn into is global reporting standards. We're not there yet. Each of these jurisdictions are working out the details of their own reporting methodologies, but I think in the long run, this is going to be about global standards that will incorporate the developing economies around the world as well, because quite frankly, from an investment strategy perspective, those developing economies have much greater potential for generating sustainable capital development with their companies.
I love that you mentioned that. I do talk to quite a few people that are running organizations in Africa and supporting the impact investing in those countries there. So very important that they are given the support needed and required to grow and develop appropriately, not just throw the petroleum world at them and have them burn coal and oil, but, do things with renewables and sell their goods and services and have a global economy, not just each country looking out for their own. And, having an ESG reporting that is global would just simplify the whole process for everyone. It really would. Because most corporations have global operations, and I'm sure they would love to have one report and not numerous.
Yes, it would save them a lot of time and human and financial resources to be able to report under one global standard. Now,
yes.
That said, in the developing economies, often there's sentiment analysis that needs to be applied to different languages that people speak. There's also a lot of nuances in the way that businesses operate in a lot of these developing economies. And I sit on the advisory board of a firm by the name of 𝒂𝒐𝒏𝒈 that it was founded by 𝒂𝒐𝒏𝒈 Williams a number of years ago. And this firm is all about how those nuances work in those developing economies, where frankly, lots of entrepreneurs who have great ideas for building and growing small businesses are at a huge disadvantage in trying to attract capital, because they are struggling with the direct environmental and social impacts of climate change today. It's not 5 years in the future for them. They have flooding, they have famine, they have disease, they have poor road infrastructure. All of these entrepreneurs with great ideas for the future of their country's economies are really struggling to get it off the ground and do it in a sustainable way.
And I thank you for actually mentioning some of these countries that have the environmental impacts hitting them now. So, we're in the United States. We hear about floods in the Midwest and tornadoes and hurricanes, and it's devastating and awful. But if you look at other countries like the Philippines, they've had so much flooding that they're just building their houses taller and taller, where someone's ceiling is now their floor, and the floor and it's just stacked to the point where they're going to have to move. And these are ancestral homes. These are where their communities lived for a couple thousand years, and they just have to leave. Simultaneously, I believe it wasn't that long ago in Iraq, they had, I think, ground temperatures of 128 degrees or 138 degrees, and entire crops of goats, I'm sorry, not crops, but livestock of goats died. That's someone's entire livelihood. And that's devastating. And that's why we're doing what we're doing. We're seeing this on a global scale. So we need to act now. We can no longer wait. And so I had to bring that up. So a little background.
I'm glad you did, because the same thing's happening in India recently with a very costly and negatively impactful heat wave that country's going through. It's happening in the Middle East. All of these things are integrated now into the impact of climate change and climate risk at a global scale. So what we need to do in the developed economies is deploy a lot more resources, both human and financial resources, and engineering and industrial resources to these issues, and do them within the companies that operate under the laws and regulations of our economies, and transfer that same type of process to the developing economies over time.
Brilliantly said. Totally agree with that. And it's necessary. All we can offer is helping, guidance, education, communication, outreach, which is what you and I both do. This is wonderful work that you're doing, and I say that sincerely. The fact that you actually have the background in finance as well as environmental speaks volumes. Very few people have both skill sets. So please keep educating. Please, guys, go to the webcast, his podcast rather, check out his services. And on that, I thank you for your time today. I am extremely grateful for everything you do.
Terrific. Well, Wendy, if I could just add one more item to our list, and that is, we can offer something else, and that is growth potential through capital market deployment in these developing economies. And that's something that I think a lot of investors are interested in, because they're interested in having a healthy world to live in today and to raise their children in. And so that's something that I encourage all of the investors that tune into your podcast shows and your webinars to discuss with their financial advisors. And then the financial advisors can come to someone like me for clarity and focus in their work. And that way we can all collaborate and participate in this process together.
Thank you so much. Well, thank you for the shout out. But the collaboration is key, because as I keep saying, a lot of these ESG positions are being filled by CPAs or economists who may not have an environmental background and think, oh, they can just wing it. And it's not something that you can just kind of learn on the fly. It is a little more in depth than that. And so, yes, we do need collaboration. We do need more people coming together. The finance guys talking to the environmental people working with the finance guys. It's not just one person that can do this full job. You need more than one. You need a team.
That's right.
And if people can do that, you will have massive success if you can do that, because this is the direction we're going. It's the direction we need to go in. And did you have anything you wanted to add before I thank you?
No, listen, I really appreciate the invitation to join you today. This is a very important part of my work, as I know it is of yours, and that is constantly getting the word out and working with what's in the media today, like these SEC proposed regulations. There's lots of opinions out there about whether they're good or bad, et cetera, but it's really important, again, for investors who are interested in supporting this process around the world to make sure their financial advisor knows about their interest and what to focus on within their investment portfolio strategies as a key to getting more capital engaged in this process.
Absolutely. And your first comment was investing in your values.
Yes.
That's the most important thing out there. So thank you for that, guys. Check out the Sustainable Finance Podcast. Check out his website. And you guys have a great day. And thank you again. I know you're extremely busy, so I know that taking even 10, 15 minutes of your time is huge. So I thank you for that.
Wendy, it's been a pleasure to join you today. I love what you're doing because you are focusing on a more general audience. And that is so important to get the word out to the general public about these kinds of issues. So thank you very much for your work.
Thank you. And I'm very grateful for that. I try my best.
Well, you're doing a great job.
Oh, thank you. You made my week. Thank you so much.
Thanks. It's been a pleasure.
So, on that, guys, I thank you for your time. We'll catch you next time. Have a great day. See you later.